Hello and welcome to this Fortnightly Market Outlook webinar. I am Devarsh. I am joined by my two colleagues, Vinay and Ajit. Good morning, Vinay.
Yeah, good morning, Devarsh, and good morning, all of you.
Yeah, Ajit, how are you?
Yeah, I'm fine. Very good morning. Good morning to everyone.
All right, so let's straight away jump into the content. So first, I'll try to cover some key developments, and then my colleague Vinay will come. He will share views from the technical analyst perspective, and then Ajit will be there to share his insights from derivative markets. In the end, I will try to come and conclude the proceedings of this webinar, and we'll try to draw some conclusions, some actionables. We'll try to present how research has been doing and how you can benefit out of it. So first, the key developments. The global problem about the US debt ceiling is over. Now, the US Senate has cleared that. The deal has been signed by the White House. What is the situation now about the global debt? That we will see. About US markets. Why US markets are heading higher, but the breadth is poor, and the concerns about the US market. How Indian market is like an oasis in the desert, and we are doing quite well in the debt side and the GDP side and the economy side. What are the next important events from the interest rate perspective? What are the fund flows? So US, the Senate has cleared and the White House has signed the deal. Now they have kicked the can down the road. Now the problem will be there in the 25. But US debt is rising from 97% of GDP. It is likely to go to as high as 130% of the GDP. So US is there is a huge debt problem which is brewing in US markets. European debt is also increasing from 84%. Now it is almost 92%. Earlier it was 95. Now it has come down to 92. Still it is very high. China also huge 1.1 trillion debt has been pushed from government balance sheet to government finance vehicles, and that is also a problem. So global, there is a 305 trillion debt, which is even higher than the pre-pandemic level, and that means that after COVID also we are increasing the debt. Compared to all this situation, Indian debt is very low. Indian corporate as a percentage of GDP has continuously deleveraged from FY 14-15, where we had reached to 62%. Now we are almost at 50% of the corporate debt to GDP debt. So corporates have a huge room to borrow. They can, when the capacity utilization rises and when there is a opportunity in economy, Indian corporate will be able to borrow and increase the balance sheet size and grow quite rapidly over the next FY 24, 25, 26. The banks' balance sheets are also very strong, so they will be also able to borrow from the depositors and lend it to corporates. So next few years we can expect money should not be problem for corporates. How markets are faring? So compared to the Indian market and the US markets, other markets have been in a form of a correction. Shanghai, Germany, Hang Seng all have been falling for the last fortnight. They have hardly up over the last 1 month. Compared to that, US markets are up almost 10%. Indian markets are up about 2%. In last fortnight, American markets are up almost 4.5%, 5%, while Indian markets are up about 2%. The real fun is in mid cap and small cap. They are up by 4.5% in last fortnight. So smaller the stock, higher the returns in our markets. And globally also markets are more or less growing. The problem with the US market is the breadth. Only 7 stocks, the fantastic 7 or the magnificent 7, big 7 companies, Apple, Microsoft, Google, Amazon, Nvidia, Facebook or Meta or Tesla, they are responsible for almost all of the returns. So whatever returns we have seen in the market, about 9.9%, 8.8% is because of only these 7 stocks, while other stocks have contributed only 1.1% of the gains. That means breadth is very low in US markets, and that is a major concern. See the percentage of S&P 500, these stocks were 1.5%. Now they are 4% of the overall market, and that is a concern. Now coming to India, real estate sector is doing quite well, while oil and gas has been a laggard. So this is the market situation. Now I will hand it over to Vinay. Vinay, can you share your insights from the technical perspective?
Yeah. There will be, please allow. Yeah.
Okay, Vinay, go ahead.
Yeah. So good morning, all of you. So welcome to this webinar, and I'm going to speak about the technical outlook on Indian markets. I will also speak some breadth indicators which are suggesting a bullishness in the market. I will also try to cover some important world market indices which has given a fresh breakouts on the charts. So our view is bullish on the market, and I'll try to present through my slides. So let us directly jump to the slides. So basically, this is a daily time frame of Nifty. So this is the daily chart of Nifty. It's a shorter time frame. And 1 minute, let me open these. Yeah. So this is a daily time frame. As we can see, Nifty has been making higher tops and higher bottoms on the daily chart, and every supply is getting absorbed. No doubt for last 5 trading sessions, we have been consolidating. Running correction was seen in the last week, but overall trend remains intact. Nifty has been trading above its 20, 50, 100 and 200 days exponential moving average, which indicates that Nifty is in a bullish trend on all time frames. And we can see over here, the previous swing high was 18,458, which was protected this week, and during the correction we saw that this level was not breached. So 18,458 is the immediate support. Last week's low was 18,460. So this is getting respected, and we have to give importance to this level as a short-term support. So 18,450 is a strong support. Talking about this upward sloping trend line, this adjoining the previous swing lows, this gives the supports around that level only, 18,450. So two rationals are there which gives the confidence that 18,450 should act as a short-term support for the Nifty. Apart from that, if we look at the moving average, this 20 days moving average in the orange color, you can see over here, it has been moving up. Now this is acting as a strong support. Here also it acted as a support, here also it acted as a support, and at present, if we were to see the level, this 20 days exponential moving average is placed around 18,360. So currently we are placed at 18,534. So more or less around 200 points from here on the downside, we have got strong support. So this can act as a strong support, and considering that as a stop loss, one should continue to hold on to the long positions in the Nifty. So this is about the short-term time frame. Let us move to medium-term time frame. This is a Nifty weekly chart. Now, if you were to come out with a target, what should be the upside target for the Nifty? This weekly chart helps a lot for anticipating the same. So if you were to consider the entire swing which we saw from the June 2022 bottom to December 22,000 top. So from the 15,200 we went to 18,900, which was the all-time high, and from that level we saw a correction which took the Nifty towards the 16,080 odd level. So if you were to consider this entire swing, the next resistance for the Nifty comes in at the all-time high, which is around 18,887, and if that is taken out, we can expect a 61.8% extension, which comes in around 19,372. But we are, as of now, this is a long-term view, so as of now we are not considering as a target, but Fibonacci extension levels are 18,887 and 19,372. Let us move to the monthly time frame of the Nifty, which gives the exact target that we are looking for the next fortnight. Is the upward sloping channel. This is a upward sloping trend line on the monthly chart. So this is adjoining 2021 top. After that, we saw that in December 2022, Nifty made an all-time high of 18,887. So if we adjoin this trend line, this gives the next resistance around 19,000 to 19,100, which we can expect as a target for the medium term, at least for the next fortnight. So according to us, 19,000 to 19,100 should be the ultimate target for the next fortnight, and this trend line is acting as a strong support. So as of now, we are taking a view that, as I suggested, that 20 days exponential moving average is placed at 18,360. So keeping that stop loss in mind, and we should anticipate a target of 19,000 to 19,100 for the next fortnight. Now let us jump to the bank nifty. Now bank nifty, as we all know, it registered an all-time high, while nifty is yet to register its all-time high, but bank nifty is already trading at near to its all-time high. And in the last week we saw that it surpassed the previous top of 44,150. Now overall trend still remains intact. Some consolidation we saw last week, some underperformance was there from the bank nifty, but the primary trend of the bank nifty remains bullish. As per us, 43,390, which was the last week's low, can act as a strong support. So 43,390, you can note down this level as a stop loss in bank nifty long positions. And on the upside, we can expect a target of 45,460. Now this is derived from the retracement levels, the Fibonacci retracement level. So considering this entire downswing, if you were to see take the 123.6% retracement of this entire downswing, that targets comes in around 45,460 odd levels in the bank nifty. So overall primary trend is bullish as we are near to its all-time high. Overall trend remains bullish, and 43,390 should be the stop loss in long positions for the next fortnight. Now let us move to the overall breadth and overall the broader market perspective. This is a Nifty week, Nifty mid cap index chart. Now this has been rising for last 10 sessions. You can see over there from March ending, this has been continuously giving weekly positive returns. So there has been 10 consecutive weeks when mid cap index was rising, and now it has reached to its all-time high. So this was the previous swing highs which was taken out, and Nifty mid cap index has started outperforming from the mid-May, and it is continuously doing well, and it is trading at its all-time high. So this has turned as a very positive sign. Breadth of the market is very bullish. As Devarsh was discussing, in US market, very few stocks are taking this index up, but we are on the other side. Actually, in our market, overall benchmark indices are consolidating, but broader market is doing very well, and that is a very strong sign for overall health of the market. Now let us move to the small cap index. Small cap index, same as mid cap, this is also high rising for last 10 consecutive week, and this was the crucial resistance in the small cap index, 10,180 in September 2022 and in December 2022. This was a crucial double top resistance which was placed at 10,180 odd level. This is taken out in this week. So 10th, we are now seeing a nifty small cap index at 10,300 odd levels. So this double top resistance is taken out decisively on closing basis. So this shows that overall broader market is very strong. Small cap and mid cap can continue to outperform from here. And if you were to see the all-time high of small cap index, which was registered in December 2022, January 2000, December 2022, still Nifty small cap index is down by 14%. So there is a huge room for small cap index to rise from here if you were to consider the historical levels. So indices, benchmark indices are at all-time high, but small cap index is still down by 14%, which gives a good space for small caps to rise further from here. Now this is one indicator which gives the strong breadth indication. So this is the number of stocks above that 200 days moving average in the index of Nifty 500. So currently here we can see that this is a number of stocks above its 200 DMA. This number has reached to 66%, which is a very good sign. Any number above 50% can be considered as a bullish sign for the overall health of the market. So now this number is continuously rising. As of now, 67% of the stocks are above the 200 DMA, which is also not a overbought. In history in 2021 we saw that this number reaching above 95% also. So this number is not indicating any overbought scenario for as far as breadth of the market is concerned. Now again, this is another breadth indicator, the number of stocks making 52-week high. So universe is Nifty 500 again, and if you were to see, this is on the beneath, we can see that this is the number of stocks at 52-week high. So in NSE 500, around 40 stocks are at 52-week high. Last week we saw that this 40 stocks had registered a fresh 52-week high. And if this indicator, if you were to consider, this is a clear-cut breakout we can see. So this is the highest number since December 2021. So definitely this breadth is indicating that day by day this overall small cap and mid cap has started outperforming, and this number can increase from here. So overall this number also indicates that market should do well in the coming times. Now talking about one sector which is looking very strong and potential for the medium term is a pharma index. So basically this is a monthly ratio chart. this monthly ratio chart indicates that if we divide pharma index divided by Nifty, this has reached to the oversold level, and also the long-term upward sloping trend line is there. So if we adjoin the 2009 bottom, and after that major bottom was seen at 2019, if we adjoin this upward sloping trend line, this pharma index has reached a long-term support, and there is a good chance that this ratio chart, the pharma performance of the pharma against the Nifty can do very well. So against the Nifty, pharma can perform well. This is a ratio chart on the monthly time frame, which indicates a good chance for pharma index to outperform from here. Now, the world indices, actually yesterday, as we all know, that Dow Jones index rose almost 700 points. So US market rallied and European market also rallied, and this has resulted into a breakouts on the medium time frame. This is a MSCI World Index weekly chart. We can see over here for last 6-7 weeks, this index was actually consolidating. After yesterday's session, as US market rose significantly, this has resulted into a breakout in the MSCI World Index. This is another index, MSCI ACWI Index, which combines the weight of developed market as well as the emerging market. And this has also broken out on the chart. This was the consolidation which was going on for last 7-8 weeks. So clear-cut horizontal trendline resistance is taken out on both World Index as well as the ACWI Index, which is going to support the overall equity market sentiment in the coming times. So let us conclude. For last 5 trading session, Nifty has been consolidating. Nifty is into a continuation of a primary uptrend with higher tops and higher bottom. Nifty is placed above 20, 50, 100 and 200 days EMA, which indicates uptrend on all time frame. Support for the Nifty is seen at 18,360 odd levels derived from 20 days EMA. Resistance for the Nifty is seen at 18,887, followed by 19,000. Bank Nifty support is seen at 43,390, and resistance for the same can be expected at 45,500. Nifty mid cap and small cap indices have been outperforming the Nifty and Bank Nifty, which is expected to continue from here. Small cap index has been rising for last 10 consecutive weeks. However, it is still remains 14% down from its all-time high. Market breadth remains very strong, as we have discussed, looking at the number of stocks hitting 52-week high and number of stocks above 200 DMA, which is very strong for the overall health of the market. Technical setup of the world market is bullish, as we have just discussed about that. Pharma sector is expected to outperform in the medium term from here. So overall, we advise traders to remain bullish in the market with 18,360 stop loss in Nifty. On the upside, we can expect a target of 19,000 in next fortnight. So that is all I wanted to share. Now over to you, Devarsh bhai.
Okay. Now we will hear from Vinay, from Ajit, my colleague for derivatives. I don't have now the admin rights. So Omkar, can you please give rights to Ajit to present his screen? Vinay, can you try?
I don't have that this permission to permit him.
I also don't have permission. Omkar, are you there?
Yeah, Devarsh, can you see my screen right now?
Yes, Ajit, it is visible.
Yes. So, yeah. So thank you, Vinay, for giving us
Ajit,
valuable insight.
now.
Yeah. So thank you, Vinay, for giving us valuable insight about the market from technical perspective. So now look at the market from derivative perspective, because derivative perspective gives us the sentiment about the market. So how the market is placed and what has happened during the week. So we have seen short covering in the Nifty futures, where during the week we have seen Nifty futures going up by 1.9%, and the open interest has grown by 2.09%, which is a very good indication. And also, long build-up is seen in the Bank Nifty futures, where it has risen up by 2.1%, the open interest, and Bank Nifty going up by 0.4%. From the open interest perspective, what we have seen, like 18,400 to 18,300, we have seen a lot of put writing, and on the contrary, 19,000 we have seen call writing. So what does it indicate? This data is of June monthly expiry. Why? Because we are looking from market from a fortnightly point of view. That is why we have shown the data from monthly expiry point of view. So here what we can see is like 18,400 to 300, we can see a lot of put writing happening. And the interesting thing is we can see the slope is going downward. And near the 19,000, we can see huge call writing happening. So from open interest perspective, we can say that the option writers are not very confident at these levels. So that is why going forward, 18,700, 800, they are not going to be a very strong kind of a resistance. Whereas if we look at the puts from 18,400 and 300, where huge open interest has been developed, so this level is going to be a good support in future. So this kind of analysis we can do from open interest data. Uh, Even if we look at the change in data, one is the open interest data where we can see where the OI is built up, and next important thing is we have to see the change in the data, what is been developing during the week. So what we can see is 18,500 and 18,900. These two sides, 19,000 is the important level where 2,425 contracts has been added. So this is very good indication. This suggests that market has a high probability to test our 19,000 level in the future. And now the important player of the market, that is FIS. So what they have done. So long buildup was seen by FIS in the index future segment on Friday, where they net bought 476 crore contract by open interest going up by 7,311 contract. Moreover, they have also done a short covering in the stock future segment where they net bought 2,546 contract, where open interest going down by 34,792 contract. Also, they have net bought 6,870 crore in the cash segment during the June series, and we are just in the beginning of the June series, and they are continuously buying in the cash segment also. So overall breadth of the market is supporting. Open interest data is supporting the market. Even FIS figures are also supporting the market. So what would be our outlook, and what is our trading strategy for the fortnight? What we can do is like we can remain bullish and accumulate longs on decline with a stop loss of 18,300, because we have seen in the open interest data that 18,400 and 18,300 is a huge support. Even FIs have created long in the index future segment. They have covered their shorts in the stock future segment. They have bought in the cash segment. So with the help of this, we can keep a stop loss of 18,300 and look for a target of 19,000 level on the higher side. And in case of Bank Nifty, we can accumulate with a stop loss of 43,400, and we can look for a target of 45,000 to 45,500 on the higher side. And in Bank Nifty, the important thing I would like to highlight is PSU banks. PSU banks make you higher return compared to the private bank because the ratio chart of PSU bank is performing better than the private banks. Thank you. That's it from my side. Over to you, Devarsh.
Okay, thank you. So now let me present my screen. Is my screen visible?
Yes, sir.
Yes.
Okay. So now let's go and look at the important economic data calendar which is there and try to conclude from this webinar. So important thing is that the US interest rate decision is going to come out on June 14th. The ECB is going to announce the interest rate decision on 15th of June, and on 16th of June we have Bank of Japan. So all these three important interest rate related decisions are going to come. Now, why it is important is because the mandate is to increase the interest rate to cool down the inflation. Now, when you want to cool down the inflation, you want employment to come down, unemployment to go up. And the problem with the Fed is that despite increasing interest rate by so many percentage, unemployment remains very low. So this is a problem, and because the unemployment data is so low, there is a possibility that there could be one or two more interest rate hike required in the market, which is currently not discounted in the market. So this can create a problem for Indian markets, for global markets over the next couple of months. May and April, June and July could be a issue. Now, after June, July, once interest rates are actually hiked, whether they are hiked or not, they will remain steady. Once that is going to happen, we expect dollar to weaken and a lot of foreign flows to come into Indian market. If you see this chart, in 2015, we had a huge amount of FDI plus FI flows, while now gradually the net FII, that is equity plus debt flows, have been quite negative. The equity flow, debt flows have been positive, but net we are at zero. So huge amount of flow can come if this situation improves. So many people ask me that markets have risen and FIFs have turned buyer, markets are rising. So markets are likely to rise on back of these good fund flows, but provided DIIs also do not sell. If you see this chart, what we have seen in the historically, while FIs were selling quite actively, DIIs were buying, then DIIs started selling while FIs were buying. Gradually in the month of May, we have seen that the FIs have become a large buyer, but DIIs have been quite muted. If market were to go to all-time high and sustain at all-time high and beyond, we need these two figures to be in the positive. So if FI flows continues like what they have been in May, after July, August, we expect higher amount of FI flows to come. And if SIP flows continues, SIP money continues, then we can have a bigger rally. The breadth of the market will continue to do well. So the conclusion is that the flows are going to be positive, and that will help us garner more positive returns for Indian markets. Now, what as a customer of HDFC Securities, as a relationship manager, what all of these things means to you? That means whether you are a trader or you are an investor, whether your customer is a trader or an investor, all you have to do is convince them about the opportunity presented by Indian markets and follow our recommendations. Now, if I look at the recommendations which we have issued from the month of May, last couple of months, and those who have achieved targets, the list is quite big. 26 fundamental recommendations have hit their targets, like setting 27%, Gore and Well 27%, High Energy 26%, Engineers India 25%, Ion Exchange 24%. The list is quite big. From 27 to 14% return, these are the names which has been profits have been booked on the fundamental side in the month of May and first few sessions of June. Similarly, if you are with a short-term trading outlook, we have given a lot of BNPL or MTF or e-margin recommendation. Another 26 have achieved their target from 1st of May. These are 19% return with the absolute return. If you calculate the interest at 14, 15, 16%, 18% kind of returns have been booked in IDFC Bank, BSC, EPL, JTKT, India, JK Tyre, and Apollo Hospital, up to 5%. So, and these are within few sessions only. So these are short-term trading recommendations which are hitting targets in 2 to 10 sessions within a span of few sessions. 19 to 5% kind of targets, almost 26 recommendation, fundamental, larger targets, and over a longer period time. So whether you are investor or a trader, opportunities are there in the market. So outlook is the new Olympic logo is CTS, Altius, Fortius, and Commuter. That means our markets are rising. They are rising faster. They are going higher. The breadth is strong. And together with the global markets, we are headed higher. Research recommendations are there for you to make money. I request all of you to go through MTF recommendations and fundamental recommendations which are being issued. Do the asset allocation, according to your asset allocation, whatever money you have decided to take risk for equities, allocate between long term and short term. Depending upon your risk appetite, use our recommendations to make money. These are opportunities which comes in few quarters. Make the hay while the sun shines. A lot of our colleagues and customers portfolios have hit all-time highs, and they are making good amount of money, those who are using research, and they are uh, doing it intelligently, doing it with the risk management in place. Trading with the discipline will make you a lot of money. Follow the stop losses in the target. Do allocation. If you are a trader of 5% of your trading capital per idea of MTF, if you are an investor, about 5% per fundamental calls, have about 15 to 20 positions open. Keep track of the stop losses and the targets. As and when the targets are achieved, book profit and churn into new ideas. Lot of opportunities are there to be make money, and we will continue to bring out as many possibilities are there in the markets on fundamental side as well as on the trading side. Apart from that, if you have a higher risk appetite, we have a lot of the derivative recommendations in the form of uh, options recommendations, stock future recommendations, and expiry recommendations also. Derivative strategies are there in the markets to make use of this. So times are good. Make full use of this time and try to make as much wealth as possible for you and for your clients. That brings us to the end of this webinar. Now we have some time. We will take a few questions. So if you have any question, please put it into the question mark box, which should be available depending upon the screen you are using. A question mark should be there on your window. You can use that to show the market questions. Yeah, we'll wait for the some question and answer to uh, window to appear. Meanwhile, I'll ask one question to you. So, Vinay, from technicals, you think this pharmaceutical sector has a good opportunity?
Yes, definitely. So we have discussed about the ratio chart, and it's a long-term outlook, because if we divide the pharma index with the Nifty, it has reached to the long-term trendline support. So which gives the perspective that in the coming times pharma can do well. On the short-term chart also, we have seen that Nifty pharma index has surpassed the 200 days exponential moving average, the previous top. So overall, there is a strong breadth, and this is usually considered to be as a defensive sector. And even if market corrects from here or short-term consolidation comes in, we can see outperformance coming in the short term also from the pharma sector. So gradually this index is getting strong against the Nifty, and in the coming times for the medium term, this index can outperform from here. So overall pharma stocks and sector is looking convincing from here.
So Udit Kumar is asking that can you summarize in Hindi also? So I try to summarize the development in Hindi. हमें लगता है कि ग्लोबल मार्केट सेंटिमेंट्स पॉजिटिव है, ऑल टाइम हाई कुछ मार्केट जा रहे हैं, इंडियन मार्केट्स भी ऑल टाइम हाई की तरफ बढ़ रहे हैं, ब्रेथ हमारा पॉजिटिव है, फ्लोज हमें लगता है कि एक आध दो इंटरेस्ट रेट की मीटिंग के बाद और तेजी से भारत में आएंगे, और अगर फ्लोज एसआईपी के फ्लोज भी पॉजिटिव रहे तो हमारे मार्केट में और बड़ा तेजी हो सकता है. डेरिवेटिव के पर्सपेक्टिव से अभी भी सिचुएशन पॉजिटिव है, और टेक्निकली 18,350 के स्टॉप लॉस से आप लॉन्ग रह सकते हैं. बैंक निफ्टी ने नया ऑल टाइम हाई बना दिया है, और आगे हमें लगता है कि निफ्टी भी ऑल टाइम हाई बनाएगा और उसके बियॉन्ड जा सकता है. इंटरनेशनल क्यूज अभी पॉजिटिव थे फ्राइडे को, तो उसका असर हमें नेक्स्ट वीक में देखा जा सकता है. फार्मास्यूटिकल सेक्टर में बॉटम पे है, वहां पे अपॉर्चुनिटी लॉन्ग टर्म इन्वेस्टर्स की दिख रही है हमें. Ajit, any update from derivatives from IT sector specifically?
Yes, sir. So IT sector is also looking good. If we look at the derivative as well as technical perspective, it has made a multiple bottom, and good open interest has been built at around that area. Though we do not have that sufficient data compared to Bank Nifty and Nifty, but this sector is looking positive, and we have also issued a report on IT sector. Even ITBs we have recommended, and so far that is also doing well. And we have seen in last couple of days, mid cap IT is also performed. They have given a fantabulous return. Even now, large cap IT is also participating along with it. So that gives an insight that IT will continue moving higher.
So IT will continue to move higher, as Ajit has pointed out, and Ajit has also come out with an ETF report on IT. Please go through that. Pharmaceuticals, we will come out with individual stock recommendation as and when the opportunity comes. The Sun Pharmas and Lupins and other doctorities, that kind of large caps have already started moving. Sun Pharma has moved beyond 1,000 rupees, and the opportunities will be there in stock specific action. We will come out with those recommendations during the trading hours. So open fundamental calls. So we cover all our calls on a Monday on our weekly file. We cover all open fundamental calls. The file is available. The weekly report is available on our website. If you are a customer of HDFC Security, go to HDFC Securities research section, and even there you will find the weekly file. Trading calls, we cover it every day in our daily file, the daily morning file, the daily. It is available on our website. If you are a HDFC Securities customer and if you cannot go through, cannot find these files on the research, please contact customer care or your relationship manager. We'll be more than happy to provide you this research ideas. Yes, so Ranjit is asking for more MTF calls on MTF. Yes, we will consider. There are many recommendations open. We will keep sharing those recommendations, open recommendations on our research WhatsApp group and on our various reports. So customers are asking about where all they can see these recommendations, MTF recommendations. So it is available on our website. It is available with our relationship manager. Please contact your relationship manager or go to the website and see there. Everything is available there. And if you don't find it, write to customer care. We'll be more than happy to provide it. So I get 1, 2, 3, 4, about 5 to 6 questions from customers are there about where to find research. So I'm clubbing all of them. Okay, individual stock specific questions we will not be able to answer. Rahul is asking about, good morning sir, as you said unemployment rate should hike with hike in interest rate, but currently unemployment rate is very low. We can't say it's not rising. So is there any specific reason? So in US, many people post COVID has filed for the disability insurance, disability claim. So according to the estimates, millions of people have now are not working and they are claiming the insurance from the government, and that's why available people to do the jobs are less, and that's why even after the increase in the interest rates, the unemployment figure is not rising because jobs are there. People applying to those jobs are gradually have come down due to COVID and due to disability post-COVID due to insurance claims, and that's why even after such a hike in interest rates, the unemployment is not rising. But the recent picture is showing that the May-June numbers are a little soft, and then by July we think that the interest rate hike will be over in US market, whether one or more hikes will be there. After that it will stop, and that should stop the flow from going into US into emerging markets, and that should help us from last few months of the year. Right now flows have become positive. If flows continue to remain positive and along with the SIP flow, we can have a large positive markets into fag end of the year. I think that's enough. If you have any questions, you can always contact our relationship manager or write to us, and we will be more than happy to answer your question. I think this has been a good session. Thank you, Vinay and Ajit, for providing your insights. As I have concluded, markets are good. There is enough money making opportunities are there. I hope everybody benefits out of it, and let us all participate in the bull market which is there in the Indian equity markets. Thank you. Thank you, Vinay. Thank you, Ajit. And we can
Thank you, everyone.
Thank you, everyone.
Yeah, thanks and bye. Have a great weekend ahead.